Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to bring you some foreign exchange charts today, and I'd like to start off with the euro against the dollar. Now here we have a bullish white soldier yesterday and a new October high as the market took on board the comment I gave yesterday of engine running but going nowhere. Overall, we still have the idea put forward some while back for a big head and shoulders top formed over 2017 to 2018. It's something I've been carping on about for ages and ages and ages. This is the one with the target X in the 104.85 area. In the meantime, we're now approaching the upper time, currently 111.42, of the big bearish March to June Andrews pitchfork that's been running the move down since June. The next chart I'd like to look at is cable, aka sterling against the US dollar. Now here we have a second bullish white soldier and second consecutive close over the key 50% Fibonacci line of the 2019 move so far at 126.69, and the long moving average currently 127.11, and finally the seminal June high at 127.83. Now this high originated the prior move down that led eventually to the recent rises. Today so far it seems the market is once again not too comfortable being up here right now. Nevertheless, the recent action is the beginnings of a follow-on to last week's weekly key reversal up and to the recent monthly key reversal up seen in September. It is also becoming a counter to the longer-term structures discussed here for some time now, notably the final target X for potential bearish halfway hesitation seen over the last few years on the longer-term charts. Now, this target X is also coincident with the 1985 low at 105.25. This is, of course, a huge ask, and I've already mentioned it lots of times to get used to the idea. It's still a very, very, very long-term target, and it was threatened at the end of September and once again now. The next chart to look at is euro against sterling. A lower, but still completely indecisive, long-legged doji cross yesterday. Perhaps not that surprising really, as you can see later on here. We did indeed make a new post-May low, but we also closed within one tick of the prior day. It nevertheless is the second consecutive close below the seemingly important 38.2% Fibonacci line of the October-December 2016 move at 87.08 and into the congestion from March to April this year between roughly 85.20, 86.80. This is what I was referring to earlier. All this ties in with a follow-on to last week's weekly key reversal down. The next chart I'd like to look at is the US dollar against the Japanese yen. A small bearish black crow yesterday, looking suspiciously like a bearish hanging man pattern. Now this may tie in with yesterday's comments of being caught in between the support based on the 50% Fibonacci line of the whole of the 2019 move so far at 108.41 and the very next resistance, the 50% Fibonacci line of the 2016 move at 108.86, which is just ahead of the next resistance, the overhead long moving average, currently 109.07. Watch carefully. The final chart I'd like to look at is the Aussie dollar. On its own, an indecisive doji cross yesterday, possibly a little bullish. However, looking at the last 3 days action, you may have, depending if we close well up today, a 3-day bullish morning doji star pattern. It all depends how we close tonight. With this in mind, it's worth remembering my words of a couple of days ago, which are, the market seems to be having doubts about venturing over the previously pierced and closed over very recent 50% Fibonacci line at 67.81. I also added a comment I made last week on this rise, and that was, the market still has to navigate its way through the overhead quagmire of congestion dating from August between 68 even and 67.40. It seems to be trying to do that, but is also showing the effects of trying to do so as well. In the meantime, good trading.